Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Wall Street poured $2.6 billion into crypto ETFs this week, while institutional demand signals a major shift in market structure. Bitcoin trades at $77,568 this morning, holding most of its 23% weekly surge that marked the strongest performance since March 2023. Ethereum sits at $2,462 with XRP at $1.48 after its massive 48% weekly rally. The standout development came from ETF flows. Bitcoin ETFs absorbed $1.92 billion in their best week since October 2025, while Ethereum ETFs pulled in $697 million. XRP products led altcoin funds with nearly $40 million in weekly inflows, their strongest since May. Solana funds captured $28 million, Chainlink $13 million, and Hyperliquid pulled nearly $4 million. This broad rotation suggests institutional appetite is expanding across the crypto market. Meanwhile, stablecoin infrastructure is attracting serious capital. Fasset, a digital banking platform powered by stablecoins, just raised $68 million led by Japan's SBI Group, hitting a $1 billion valuation. The company processes over $40 billion in annual transactions across 125 countries. SBI's network spans 470,000 locations, transferring to roughly 200 countries, giving Fasset massive expansion runway across Asia and emerging markets. This comes as Washington eyes stablecoin issuers as replacement buyers for U.S. Treasuries. Foreign investors sold $29 billion in Treasury bills during June alone. Tether already holds over $114 billion in direct Treasury bills. The Genius Act and Treasury's proposed rule formalize stablecoin reserve requirements in government instruments, converting stablecoin demand into Treasury demand. Crypto card spending crossed $1 billion in July, more than tripling year over year. Stablecoins funded 70% of over 10 million transactions, with USDC accounting for 50% and USDT 20%. Average transaction size grew to $86. In emerging markets, groceries account for 35% of Brazilian crypto card activity, while Argentine users deploy USDT for 72% of payments. On the security front, Term Finance lost $8.5 million in a governance attack. An attacker bought a majority stake in the thinly held governance token, then voted to grant control and drained roughly 2,800 Ether and 1.7 million USDC. Ray Dalio weighed in on Bitcoin, recommending investors hold a bit alongside 10 to 15% in gold as protection against US debt risks. He estimates a crisis could emerge in about 3 years. All eyes now turn to Jackson Hole, where Fed Chair Kevin Warsh delivers his first keynote Friday. With September rate expectations shifting and Bitcoin testing $80,000 resistance, Warsh's tone could determine whether this rally extends or consolidates. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.